Yeah, so, hi everyone. My name is Brendan Wood. I'm the CEO of SnapTrade. And to my left here is Steve Quirk, Chief Brokerage Officer of Robinhood. It's a pleasure to be here today speaking with you, Stephen. You might wonder why I'm here talking to Steve. And the angle from my business is that we are building a non-custodial trading API that leverages existing brokerage accounts. So we're trying to enable sort of like a Cambrian explosion of new investing experiences, but enabling people to do that with their existing brokerage accounts. And Robinhood is very interesting in this space as well, in that you guys have a reputation of being a disruptor and really pushing forward what it means to be a retail investor. So I'm hoping we can have an interesting conversation here and kind of dig into your experience in the industry personally, how the industry has evolved, and kind of the direction that Robinhood is going in the future to continue being a disruptor.
Yeah, first of all, thanks to the team for having us. My experience in the industry, which is unfortunately a little too long, especially in terms of Robinhood years, I've discovered that I'm one of the probably the oldest people at Robinhood. When I make my references to movies or other things, they kind of look at me blankly. I mean, they don't even know the remake of the movies I'm referencing. You know, like if I reference original Point Break, they haven't even seen the new version of Point Break. So I really have to dial down my references. But my experience is I kind of started at the bottom of the funnel, closer to the bottom of the funnel, meaning with market makers and liquidity providers. So everybody who is trading is throwing everything into that funnel. And, you know, we're taking the other side of those trades. So you learn a lot about retail traders, even though you're technically not one. And then I just sort of crawled my way to the top of that pipe and looked up and said, all right, who's throwing all these trades in here? And had an opportunity to start by educating those. This is early 2000s. You know, we used to have long form education where we'd have 2,000 people in a room and we'd just talk to them for a couple of days about how they can be more successful in their investing, both through technology and through learning how to be more successful. And it was actually pretty liberating because, you know, when you're just based on, when your whole economic model is just based on how profitable you are on taking the other side of people's trades, it's cool, but it's not really as fulfilling as helping people. And so the technology, the advance in technology, you know, the fact that commissions basically, well, they did go to zero, but the cost of technology, the information flow, and the ability for people to get educated at no cost, it's just been like the playing field leveled so much. It's amazing.
You've been in the industry a long time.
We established that.
Yeah. Okay. What was it like on day one when you first started in the business? What was kind of the state of the industry?
I started the week of the '87 crash on the trading floor. So it was pretty chaotic. It's gotten less chaotic every day that I've been in the business because of that. But the state was, you know, again, high cost, really skewed for the pros. You know, we paid a fraction of the cost of what a retail investor was trading in those days, $75. So, you know, there's a lot of things that have skewed really well. And the technology is amazing. We used to pay $10,000 a month for technology that was not close to what is in the hand of retail traders today for free. And so that's amazing. I just think it's opened up the door for so many people with not, you know, who don't have to accumulate a whole bunch of assets to get started. They can start with $5 and invest on on an interval basis. It's amazing. It's awesome.
So for you, it's really about opening up the accessibility of the market to people who historically have not been able to participate due to whatever barriers. Is that the idea?
It's giving them the technology and the wherewithal to do it, removing the friction as much as possible. But there's another element which I think is, it's being a little challenged right now in some of the things that are being discussed and some of the regulations that are being proposed. There's sort of this, what I'll call a little bit of a paternalistic state that says, hey, you Robinhood user that's 31 years old and has $25,000 in your account, you're not smart enough to do it. This, I'm going to pick on Fidelity user who's 55 and has 250K in their account, they can use these instruments, but you can't. And I'm like, really? It's freaking stupid, right? Like, to me, it's all about education. Like, even if it's an instrument which could be something that, if not used properly, you have to be careful and make sure that they're using it suitably. We have instruments like that today. It's called a fork. All of us learned how to use a fork. If you take a fork and stick it in your eye, you're gonna be in bad shape. But we teach our kids not to stick it in their eye, and they all use one, right? So, like, it's not about protecting people from things, it's about teaching them how to use them, and if it's advantageous for them to use it, great. If not, stick to the spoon, right?
Exactly. So Robinhood has a reputation, of course, of being a disruptor in this space. It's almost the poster child for neo-brokers that are trying to push the envelope. But at the stage you're at now, publicly traded company, tens of millions of users, it's a little harder to claim the disruptor label when you're that big. So what does growing up mean for a brokerage like Robinhood? How is that changing your positioning?
It means actually you're basically growing up with your customers, because they are Robinhood, right? There's 23 million people that are Robinhood, and yeah, many of them started on the self-directed side. Half of them have never had a brokerage firm, never invested in securities before. So that's their entry point into the market. But now they're getting to the point where they're, thinking about retirement. They potentially want an advisory product. They want to get yield instead of just doing self-directed investing. So you have to kind of round out the offering and make sure that you're growing with them. And that's something that, if you look at the history of the brokerage space, most brokers start as a niche broker, and then they build out the core offering over time and kind of grow with their constituents and customers, and that's the part of the journey we're in right now.
Interesting. And so, how are you planning to approach that in 2024? Like, do you have kind of a feature roadmap of things that you're planning on rolling out to directly support these new use cases and the growth of your customers?
We do have a feature map, yes. And where's Ruki? She was very clear with me. I should use the words imminent and not dates. I'm very well media trained. Yeah, we do have a feature map. But we also want to do things, there are interesting places, and I'll give you an example, retirement, where we can do things that aren't just copy paste of I'll call legacy brokers. And so like our retirement offering, we looked some 40% of the customers that use Robinhood are either partially or completely in the gig economy. So that means there's no 401k match for them, right? So we said, you know what, we'll make a match. And we won't just do a match where we incent you to bring money in. We'll match your contribution every year you make a contribution. And look, where the world is headed, it's probably going to be a bigger number, more than 40% over time. So we try to do things in a way that not only accomplishes the needs for them today, but where they're going to be tomorrow. And I think that's had great reception with our customers. They're big fans of it.
Do you have a specific example of something new that you're planning to release in the next year that you're able to share today?
Well, I've only been with Robinhood for about a year and a half, but I've been with other legacy brokers. And we had international offerings, so I used to go all over the place. We had offerings in Asia and other places, and everywhere I went, every single country I went to, they're like, oh, this is the Robinhood of Australia, this is the Robinhood of Singapore, this is the Robinhood of Hong Kong. So we're going to be the Robinhood, the original OG Robinhood of those countries, and we're starting with the UK.
I love it. That's awesome. Yeah. Given that a lot of the users or customers who come to Robinhood, this is kind of their first experience with a brokerage account. Do you find that they're ever using it in unusual ways or doing surprising things that you never really expected?
It's a good question, because in some ways they use it the same way that, again, I'm more accustomed to 55-year-old average age of a client who's got a little bit larger of an account. There's a lot of similarities to what they do and what younger customers do. They all want, access to good information. They want to make sure the technologies are there for them and that they have transparency, but also the ability to do things whenever and however they want. but they also do things slightly differently. So like they skew very much to the EV space, you know, and in terms of what they're investing in, it kind of varies a little bit. The duration of their investment is probably a little shorter as well. But if you think about it, like let's take a step back to my parents, who actually both were in investment clubs. You know, they would buy a stock, and those stocks have been around for 100 years. Today, you know, companies come and go. So, I mean, you have to change the duration of your investment style because they get in growth spurts and they're very good for people from an investment standpoint, but then they can turn around just as quickly. So I think they're just more adept at seeing the changes that happen from an investment standpoint and moving a little more quickly. And again, part of that is probably because 95% of what they do is on a mobile device and they have it in their pocket at all times.
Going back to the growth of Robinhood over the last decade or so, obviously there were a lot of envelopes that were being pushed and new features and kind of like disrupting the industry. Can you think of like 2 or 3 specific things that Robinhood did that were pivotal for the business in terms of its positioning in the market, the things that really drive the growth?
One of them was before my time here at Robinhood, but I was on the other side of it, so I'm very familiar with it. That was just the removing the commission. And, you know, again, there's always talk about, well, yeah, but the model is, you know, order revenue sharing, you know, PFOF. And so I have 3 daughters and I don't know if you haven't heard this story, I tell this to people. They say, how'd you get to Robinhood? You know, kind of an older guy, they're kind of a younger company. And I, being the typical annoying father, my 3 20-year-old daughters are just starting in the workforce. So I told them, you got to make your money work for you as hard as you work for your money. And so you need to open an account and start investing. I'll help you. And, you know, they open an account, but then they show it to me and it was a Robinhood account. Now, I didn't work for Robinhood, so I'm like, what, WTF here? Like, what's going on? I'll still help you, and they're like, we're going to do it our own way. This is where all our friends have their accounts, so we want to do it here. And I'm like, awesome. So I tell people I followed them over, which is kind of what happened. But I think in the context of how they do it and what they do and how they invest, you know, again, I'll pick on my daughters again. You know, as soon as they start investing and I help them, I tell them, invest what you like, but let's throw a couple, you know, broad-based ETFs in there. But it's your decision. And then, you know, the first time the market's down, Dad, I'm losing money. You told me to do this. I'm losing money. I'm like, I'm going to tell you, I can't use the word guarantee because you're not allowed to in this business, but I'm going to tell you in 20 years, you're going to thank me. But here's what you have to do. You're going to start doing a reoccurring investment of however much you want on whatever time interval you want. Let's say monthly, $100. You pick what you're going to invest in, and then you don't have to worry about the ups and downs on a daily basis. It'll take care of itself. If you just look at historical returns of the market, you're young enough that it will work out. So I think in my mind, helping people, if you can help people, the amount of people that I've encountered in my investing career since I started in this business that have told me, like a 40-year-old or a 45-year-old that said, man, if I would have started doing this at a younger age in a suitable manner and understood what I was doing, it would have changed my life.
So do you feel that Robinhood is taking the same approach with essentially the next generation of investors? You're trying to coach them into being responsible long-term investors?
I do, but I also think there's another element that we have to be slightly careful about, and that is we love to use the word long-term investor as if it's very virtuous, and if I'm trading on a more active basis, you know, you sort of, you know, have a scarlet letter on your, oh God, there's another reference none of you are going to know. Most of you are going to know that, come on. So I think you have to remember that people, like what typically happens, I'll take a prototypical customer. They take like 60, 70% of their investable assets and they put it in a portfolio that they're comfortable with for a longer duration. And then they like to play around and see what is moving, what's hot, what can I invest in for a shorter duration. And that's okay. Like that's perfectly fine. It's actually something that I think, you know, at least in the crowds I run in, it's the thing that people talk about. You know what I mean? When they go to a party and they're like, oh yeah, I invested in Tesla, it's doing really well. Like they're not at a party going, oh, I bought a Muni and it's delivering 5.25 and it's not taxable. I mean, that's just not really what's exciting, so.
Right, there's a fine line between, what you could say is like the responsible way to invest, but it's very boring. And if you try to encourage that too much, people just don't do it at all, right? But then,
well, but I think you also have to remember it's a little generational, So, I think people are they're gonna, as long as they're doing it in a responsible manner. I love to use this analogy, like nobody argues that if you start learning to exercise at a younger age, that you're better off in the long term. Nobody would argue that if you start to invest suitably at a younger age, you're better off in the long term. But for some reason, on the second one, we want to be very prescriptive about how they do it. On the first one, we say, hey, let us teach you how to exercise so you don't hurt yourself, so you do it in the best way possible, and it's going to help you in the long run. On the second one, we seem to want to, prescribe what we think they should. Oh, no, don't use that pull down. That thing could snap on you. You need to just lay on that foam thing and bend your, I'm exaggerating. I don't have a good analogy here.
Oh, that's awesome. I think I get what you're saying. Stephen, this has been a fantastic conversation. I really appreciate you coming out here and speaking with me today.
Do I get to ask you a question?
Absolutely.
All right. It's a kind of a pile-on from the question that was in the last panel. Where do you see this market going in terms of not only, I don't mean the direction of the market, like nobody knows that. People claim they do, don't pay them. They don't know what they're talking about. But just in general, like I mean from a technology standpoint, from the way people interact and everything.
So in my opinion, it's going to go towards more bespoke tools for specific types of strategies. What I've seen in speaking to a lot of retail investors is that they're all like a little weird. They all have different quirks about how they want to invest.
Did you have to use that?
I did.
It's my last name.
They all have a different way they want to invest, and a one-size-fits-all tool is kind of hard to build. It's kind of like a Swiss Army knife versus a scalpel. And so the more tools we can have that are specifically designed for these individual use cases, the easier it will be for people to invest in the long term and kind of do what's best for them. So where I think it's going is kind of more towards that. More tooling for specific investment types, right? But that's also hard to do at scale because you just got such a wide diversity of different ways, different investing styles.
The thing that I find probably the most energizing is, people want validation. They want to talk with people that are like them and say, hey, this is what I'm thinking of doing. It's actually a good way. They come up with an idea, and they validate. Am I thinking about this correctly? And maybe somebody points out a flaw in their investment thesis, and then they change it a little bit. But after that, if they're successful, people can write about them and say, oh, they're doing this wrong. They actually don't care. They don't really care what other people think, like outside. Like if they're being successful, cool. Like they're going to do it their way. To your point, very individualistic. Like one person says this indicator is, it's created by God. It's infallible. Every single time I use it, it brings me success. Awesome. Keep doing it. Yeah, do it your way. I think we're getting the hook.
Yep. Steve, thanks a lot.
Thank you.